Have you ever just stared at one of those really dense financial reports, maybe an earnings presentation, and you feel like you need, I don't know, a compass, a map, maybe a strong coffee just to figure it out? All those numbers, the acronyms, percentages, it's really easy to get lost. I know I have. Well, think of this as your expert guide today. We're not just crunching the numbers, we're diving deep. We're exploring a pretty big question. Is CMS Info Systems really shifting, moving from that traditional cash logistics giant role into something more? Well, cutting edge. A tech driven business services platform will be unpacking their Q1 FY26 results, looking at the strategic moves, all based directly on their official releases, the earnings presentation, board meeting notes, media stuff. So, our mission really for you is to give you the shortcut. We want to pull out the most important bits, the strategy, the trends, what it all actually means for CMS as it evolves. You should walk away feeling like you got a good handle on it, without the headache. Let's jump in. Okay, so kicking things off, the big picture for Q1 FY26. Consolidated revenue for CMS Info Systems, it landed at INR 627 crores. Right. Now, for context, a crore is 10 million rupees, so 6.27 billion rupees. And that's a solid 5% year-on-year growth.
Decent growth, yeah.
Then looking at profit after tax, or PAT, basically what's left for shareholders, that was INR 93.6 crores,
Okay.
which is 3% growth compared to last year, gives them a PAT margin of 15%.
15% margin, not bad.
And EBITDA earnings before interest, taxes, depreciation, amortization that came in at INR 157.8 crores. That's up 3.6% year on year. So an EBITDA margin of about 25.15%.
What's really insightful there, I think, is that the company themselves called this a seasonally weak quarter. And they mentioned, the broader consumption slowdown.
Right.
But they still delivered year-on-year growth.
Right.
That suggests some real resilience, doesn't it? It's not just stable. It points to, strong underlying demand, even when things are a bit tough economically.
Well, that's a good point.
And if you look at the trend, revenue went from 599 crores in Q1 last year to 619 in Q4, now 627. So it's climbing. Patty, okay, it dipped a little from Q4's 97.6 crores, but still up from the 90.8 crores in Q1 last year.
It's a progress.
Exactly. Their CEO, Rajiv Kaul, he was quite candid. He said, yeah, seasonally weak, subdued consumption, but they still grew. So it kind of begs the question, what exactly let them keep moving up despite those headwinds?
Yeah, great question. And that leads us perfectly into looking at the different parts of the business, the segments. Let's unpack those. First up, cash management services. Big core business for them. Revenue here. INR 417 crores in Q1. That's a healthy 8% year-on-year growth.
8%, okay.
Their EBIT earnings before interest and taxes for this segment was 100 crores. Now, that only grew 1% year-on-year.
Only 1% EBIT growth on 8% revenue growth. Interesting.
Yeah, and operationally, they expanded their reach. Business touch points and cash logistics hit 153,000. That's up 9% year-on-year.
That expansion in touch points, that's absolutely key for cash management. It just means a wider physical net for their core business. And in a market like India, where cash is still so important, that physical reach is it's a critical advantage.
Indeed. Okay, second segment. Managed services and technology solutions. This often bundles in their card services too. Revenue here was INR 258 crores in Q1. Also impressive, up 8% year on year, just like cash management revenue.
Okay, another 8% growth.
But here's where it gets a bit curious. The EBIT for this segment was INR 36 crores, and that's an 11% year-on-year decline.
Oh, okay. Revenue up 8%, EBIT down 11%. That's quite a divergence.
Right, especially with the tech-oriented side of the business. So what do you think is going on there? Is that like a red flag, or is there maybe a strategic reason for profit dropping while sales grow?
That's a sharp observation, yeah.
Yeah.
What stands out is how the company talks about managed services. They say it's tech-oriented, has strong operating leverage.
Right, operating leverage.
Meaning, as they scale up, profits should ideally grow faster than revenue because fixed costs get spread out.
Yeah.
And they also mention a strong moat, a competitive advantage because of their unified operations.
Oh, okay.
So while we see this temporary dip in EBIT this quarter, the company's framing it around strategic value, future potential. It kind of suggests this might be maybe an investment phase or some temporary cost increase. Probably not a fundamental issue.
That makes sense.
And just for clarity, you mentioned card services being bundled in. The specific numbers for cards were revenue of 137.54 million rupees and EBIT of 33.23 million. So it's definitely a key growth bit within that larger managed services category.
Okay, that context on the moat and operating leverage definitely helps frame their strategy better. And speaking of strategy, wow, this quarter had some really significant moves, stuff that really highlights this transformation we're talking about. CMS entered a binding agreement to acquire up to 100% of Secure Systems Private Limited.
Yes.
That's a big deal. An investment of about INR 80 crores.
Yeah, and Secureds isn't just, any company. They're number 4 in AIoT remote monitoring.
AIoT, artificial intelligence of things.
Exactly. Smart monitoring using AI connected to devices. Securance has been around 12 years, early entrant, lots of expertise in surveillance, analytics, compliance tech, especially for banks, financial services, insurance BFSI, and retail.
And the impact of grabbing Securance sounds huge for CMS, right? Especially for this transformation idea. It helps them scale up their Vision AI business, the one under the HawkAI AI brand.
Mm-hmm.
Apparently, the combined company will have over 45,000 sites monitored. That gives them a 36% market share in BFSI.
36%.
Yeah, which they say is more than double their nearest competitor.
From a strategic angle, this is crucial. It really strengthens a key emerging business line for them. And it also underlines their M&A track record, doesn't it? Mergers and acquisitions. They called it their 8th successful programmatic M&A deal.
8th, wow.
So it clearly shows they plan to grow not just organically, but by buying companies that add strategic tech capabilities and market share.
Yeah.
Fits perfectly with this pivot to being a tech-driven platform.
And it's not just acquisitions. They're also refreshing their identity. They've shifted their tagline from connecting commerce to something, well, much bolder: unified platform, limitless possibilities.
Quite a statement.
Yeah, but they were smart. They kept the CMS brand name. It's got strong recognition, trust.
Good call.
This new tagline, it feels like more than just marketing spin. It seems to really line up with these expanded capabilities, signaling that shift away from just cash logistics.
Absolutely.
And to back that up, internally, they've launched this One CMS initiative.
Right.
Consolidating business and operations teams, trying to make it one unified organization focused on the customer, aiming for, better efficiency, more agility.
Streamlining things.
Exactly. And that came with some leadership changes, too. Anush Raghavan is now Chief Business Officer. He's been around since 2009, heads the Cash Logistics Association. And Puneet Pirani, new Chief Operations Officer, joined this year, experience from places like OLA, Byju's.
So it's clear they're working on it from all angles, buying new capabilities, optimizing internally, and changing how they present themselves to the market. It's an inside out and outside in kind of shift.
Yeah, that internal work plus the acquisitions, it really paints a picture of a company trying to actively shape its future. But of course, no quarter is perfect. There are always challenges. So looking at operations, what were the wins and the headwinds? On the plus side, CMS landed some big new orders, INR 500 crores worth, across software, managed services, and cards.
500 crores in new orders. That's substantial.
Yeah, and a really noteworthy one was a multi-year software contract with ICICI Bank for their whole ATM network using the Aljo MVS system. That's a huge vote of confidence, isn't it, from a major bank like ICICI?
Definitely. Those wins are positive signals. Absolutely.
Yeah.
Shows demand is there for these evolving services. However, this quarter also had some clear headwinds.
Yeah.
As you said, they mentioned the subdued consumption trends again, hitting retail spending, ATM use,
Right.
and the rollouts of new ATMs by those brown label operators, the non-bank ones.
Yeah.
They were slower than expected. Only about 8,000 out of a planned 24,000 got done, so only a third.
Oof. Okay. That's quite a delay.
And then there was this big request for proposal, an RFP, from a public sector bank for outsourcing cash management for 10,000 ATMs. It actually got canceled and then reissued.
Canceled? Why?
Apparently because CMS was the only qualified bidder, which, might suggest maybe a lack of competition or the bank rethinking things. But the result for CMS was a delay in potentially getting that business. So yeah, it raises an important question. How might these market challenges, these operational delays, especially with the ATM rollouts and that RFP, how might that affect things in the next few quarters, even with those strategic wins happening?
That's a crucial point. And it brings us to, well, the road ahead. What's the future vision? What are the opportunities? Despite those headwinds, CMS is clearly focused on grabbing what they call limitless possibilities. They see a big opportunity in organized retail, calling it fast-growing and underpenetrated. Apparently, only about a third of the, 550,000 organized retail touchpoints currently outsource their cash logistics, so lots of room to grow there.
And their Vision AI segment, HAAI, that looks poised for really rapid scaling now, especially with Securance coming on board.
Yeah.
CMS is already #1 in ATM Vision AI, and they're eyeing a huge total addressable market, a TAM.
How big?
Over INR 2,000 crores just in the BFSI sector, plus another 100,000 plus sites potential in retail and quick service restaurants, QSRs.
Wow.
And they mentioned they've built over 40 deep learning AI modules already. So this really signals that pivot towards high-tech, likely higher margin services. It underlines the whole transformation story.
And even on the traditional ATM side, there was some good news, right? The interchange rate went up.
Yeah, from 17 rupees to 19 rupees per transaction.
Yeah.
That could help profitability there.
Okay. Plus, you still have, what, 100,000 ATMs in India that haven't been outsourced for cash logistics yet? So
Yeah.
still a substantial untapped market, even in their core area.
And if you connect all this to their history, CMS has shown impressive growth over the long term, like 11 times revenue growth and 16 times PAT growth between FY09 and FY25.
That's quite a run.
It is. And looking ahead, the company's projecting compound services revenue growth of 14 to 17% for the next few years through FY27. That consistent growth plus their financial discipline, strong cash flow, high return on capital employed, ROCE, rising dividends.
And they're debt-free, right, with a good rating.
Exactly. Debt-free A+ rating. All that financial strength means they're really well positioned to actually invest in these new growth areas, to chase those limitless possibilities they're talking about. It backs up the strategy.
So just to kind of wrap up, Q1 FY26 for CMS Info Systems, it was a quarter of, well, stable growth, even though they faced some market headwinds. They kept expanding their core cash management footprint. They made that major strategic buy Securance Systems to really boost their Vision AI play. And they rolled out a new brand positioning, a new internal structure, all reflecting this evolving identity. It really does highlight this deliberate shift, doesn't it? From being mainly a cash logistics player to becoming a broader tech-driven business services platform.
Indeed. It's fascinating, really, to watch CMS evolve like this, from being known mostly for, moving cash around to actively building this tech-heavy business services platform. It makes you wonder, how might this kind of evolution reshape not just their own industry, but maybe the wider landscape of Indian business services, especially as AI adoption just keeps accelerating everywhere.
That's a really powerful thought to leave you with. As you think about these changes, consider how CMSs blend that mix of physical infrastructure and cutting-edge digital services, how that might impact other sectors you follow, or just how this hybrid model, physical plus digital, might keep evolving in the market overall. Definitely a lot to keep an eye on there.